So let's start our mutual fund and insurance segment that we bring you every Friday between 12 to 1. We have our experts in our studios. Jayant Pai is with us and so is Anjaneya Gautam. Gentlemen, great having you with us on Profit. Let's bring in our first caller. We have Kapil who is joining us right now. Kapil Kelkar from Pune, his regular caller. Kapil, great to have you with us. Let's get your question. What do you want to ask our experts?
Actually, I currently hold 60,000 mutual fund of SBI Magnum Tax Gen with dividend scheme and 20,000 of principal personal tax saver. That's also dividend scheme. So I can hold SBI Magnum Tax Gen for 5 more years. That is not the issue. But for principal personal tax saver, I have not got any return on that 20,000. So if I want to purchase some more mutual fund and that too tax saving, so which mutual fund I should go?
Okay, let me bring in Jayant first. Jayant, what's your call? What would you suggest for Kapil?
See, actually both these funds are pretty average performers. In fact, after Sandeep Sabharwal left SBI, the whole fund house has floundered. And we are given adequate opportunity for these schemes to redeem themselves, but so far it's not happening. So I suggest that Kapil not invest any further in either of these two. In principle also, it's been a very run-of-the-mill fund. Although there is no fund manager change, there is really no spark in that. So any future investments could be made into some of the better performing ELSS funds, such as say Fidelity Tax Advantage or HDFC Tax Saver. Now all these 4 funds, the 2 that he holds and the ones I'm recommending, they are all large cap funds. But within that, both these new funds, Fidelity and HDFC, on most of the ratios they are far better, such as Sharp and all the regular ones. And this is done by taking a lower risk as seen as in the standard deviation figures. So that's why I feel that he should go in for these two and also redeem both these whenever the lock-in is over. But I mean, he has to be cognizant that after April 1st, 2012, the tax benefits that these ELSS funds are enjoying may not continue.
Okay, before I bring in Anjaneya as well, let me just quickly read out export data, the trade data actually for the month of August which has come in. August exports are up 44% at $24.3 billion. August imports are coming in at 38.4 billion. That's up 41.8% on a year-to-year basis. The trade deficit still stands at about 14.1 billion. That's a month of August trade deficit that I'm talking about, and April to August trade deficit at $54.9 billion. It will be interesting to see whether for full year FY12 the government can perhaps achieve 200 billion or so as the projected export. Let me bring in Anjaneya as well. Anjaneya, what's your what would you suggest for Kapil?
Same. In principal personal tax saver, this is one fund which has been famous for its dividend flow, and SBI, as Jayant also said, had been performing till 2008 pretty good till the time Mr. Sabharwal was there. But since then, performance has got affected. Now, my recommendation would be to go for like HDFC tax saver, of course, along with the Reliance tax saver to be added in the same, because the performance of these two funds has been pretty good. And if we look at the portfolio as well, going forward, we expect performance on these two funds to be better than many other, considering the fact that ELSS as a category itself performs very good on the long-term side. And one more fact we should understand that Kapil, who is the investor here, he is talking about a period of at least 5 years and so. So I'm sure ELSS, rather than considering it as only a tax-saving option, you should consider as part of the portfolio which is creating alpha in the overall portfolio. So of course, HDFC and tax saver and Reliance tax saver, these two I would advise to be added in the portfolio.
Okay, all right, let me just quickly revisit the trade data. We have more data coming in right now as far as the month of August is concerned. Just before I bring in the next caller, we have we just want to recap the numbers that we have. August exports are up 44% at 24.3 billion. August imports are up 42% year on year at about 38.4. I think for imports the larger contributor is oil. Rest as far as exports, it will be interesting to see the breakup of exports for the month of August, which are components contributed substantially. Autos as a space contributes significant chunk, but then the DPP scheme gets withdrawn by the end of this particular month. That September 30th is the deadline. So is there going to be an impact if the DPP scheme gets withdrawn on exports? That will be interesting to see, but at least on a rough cut basis, these are more or less in line. I don't think there's any anomaly or anything outrightly negative with these numbers. Still, trade deficit remains beyond the comfort zone. April to August trade deficit at 54.9. August trade deficit is, I think, more or less in line. We'll go across to Sapna, or we'll go across to Sapna with more details on what exactly is the constitution of this import and export data as far as the month of August is concerned. In the meanwhile, let's bring in our next caller. Sudhish Chandran is with us right now from Cochin. Sudhish, hi, good afternoon. Ask your question, please.
Good afternoon, sir. In fact,
yes, sir, we have your portfolio. What do you want to ask our experts?
so good afternoon, sir. In fact, I am investing in tax saver plan, BSL 96 tax BSL 96 tax saver plan. So in fact, when I check the last 1 year performance, the performance is not up to the expected level. So should I invest in the same fund or should I switch to some other fund? Because in fact, earlier this I am investing in ICICI tax saver also. So that is giving me better returns. But when I joined on this one, my investor, the broker told me that this is the best performing fund and this has got some award of world's best performing fund like that. So now for last 1 year I am investing on the same and the performance is not up to my expected level. Should I invest on the same or should I switch to some other fund?
Right. Anjane, I was looking at the portfolio. I don't think any of these stocks are top quartile funds. I don't think so.
Not exactly top quartile,
but he should have more of them. Yes. What would you suggest?
See, Birla Frontline, what he is holding as of now in the portfolio is again a large cap fund, and this is part of the overall a good performing funds, if not exactly the top quartile. And this is one fund which we would advise him to hold continuously. DSP Top 100 is again a large cap. Premier Equity is on the primarily on the mid cap side, which he is holding in his portfolio. ICICI Tax Saver and UTI Dividend Yield is one fund which he is holding from the value cap category. I would advise, he can continue with the large caps and the value fund which is there in the portfolio, and even iPro Tax Saver which he is holding in ELSS. If I'm sure he has not completed the minimum holding period of 3 years. Even if he is, then he should continue with the same. But remaining portfolio, he can looking at I would say adding some more funds like HDFC Top 200 in the same.
HDFC Top 200, that's been the top performer as well.
Constantly for long.
Jayant, your recommendation?
Yeah, I mean, his primary query is on Birla Sun Life 96. So this fund has never really performed that great. And also, I did have a large cap portfolio, but for the past 1.5 years, it has suddenly changed its mandate without really professing to change it into a mid cap oriented portfolio. So both ICICI Tax Saver and Birla Sun Life 96, these are similar in the sense of their mid cap orientation, but for the higher risk that he is taking for this mid cap orientation, Birla Sun Life is not really giving him adequate returns. In fact, the standard deviation as well as Sharpe ratios are both inferior as compared to the entire category average and far inferior as compared to ICICI Tax Saver. So what I suggest that in case he has to invest in another ELSS fund, he might as well increase the amount in ICICI Tax Saver to 3,500 a month and stop his SIP in Birla Sun Life, the tax relief 96, and even withdraw from it once the lock-in period is over. His other funds are pretty good, so he could just continue with those.
Okay, let's bring in our next caller. Jayanta Chaudhary is with us right now from Durgapur. Mr. Chaudhary, hi sir, good afternoon. Go ahead, ask your question.
I am Durgapur. I am Jayant Pai speaking from Durgapur. I want to know from you that I have a mutual fund of Reliance Tax Saver ELSS board at the rate of 19.95, and it was bought by me on 2007 December. But till now, it is now below dated. So what I will do? Will it buy or otherwise it will be sell?
Okay. Jayant, let me start with you. Two stocks, two investments, Reliance Tax Saver ELSS and LIC Market Plus. What's the future prospect?
See, Market Plus is a ULIP. So any premature withdrawals will entail a high impact cost because a lot of these expenses in these schemes are front-ended. So in case, even if he is permitted to withdraw after 3 years in the older regime and after 5 years in the new regime, the costs which have already been deducted, he will not be able to get back. So in such cases, the best or the least of the evils is to continue with it till maturity, and also choose the equity option in that if possible, since most of these have a maturity of say 10 odd years. In case of Reliance Tax Saver, again it's more of a mid-cap oriented ELSS. So I mean it has only around 38% large caps, and plus the concentration of stocks is high. Like the top 10, there is around 42%, which is pretty high. it has performed well, but see, with one-time investments, the risk is always that you may never recover your cost if you just put it in one time. So what we suggest is an SIP approach. So the fund is good, but I think you have to just keep holding on.
Okay, another case of investor getting caught without really understanding a product like a ULIP, LIC, Market Plus. Anjanya, what's your suggestions?
On Reliance Tech Saver, I would say this is one fund. If we look at the performance itself, last year, which is generally the holding period for real assets, it's given almost 14.5% kind of return on this. If you look at the portfolio of Reliance Tech Saver, it is currently, I think, engineering, automobiles, financial services, and energy. And most of the stocks on these sectors are, on the valuation side, pretty attractive at these levels. And of course, if you buy or even hold this portfolio now, with interest rate, any movement, downward movement on the same, and market moving forward from here on, will show definitely a good performance going forward. ELSS, yes, I say you should continue, and this should show good performance going forward. LIC Market Plus, again, like I said, it's a ULIP portfolio. Considering the fact both debt and equity are on the lower side, debt in terms of interest rate pretty high, and equity on the lower side, valuation wise attractive, we would say, shift to equity part of the portfolio on the ULIP. That would be the advice on the same.
Okay, let me just quickly mention about two stocks. Let's pull up GTL and let's pull up GTL Infra. There's an unusual amount of activity, unusually high amount of activity on both these stocks. GTL Infra is up 15% right now. 6 million shares have been traded, much higher than the 10-day average. We have GTL Limited, which is up 30% as far as trade is concerned. Both these stocks looking good. And of course, the street has been anticipating some of the other move on these particular companies. They have been under tremendous amount of pressure of late. Financial issues, debt-laden companies, talk of restructuring happening, the pledge shares with IFCI. What happens eventually to them? The High Court has apparently given some bit of a setback to IFCI as far as their holding is, as far as the pledge is concerned. So they of course can't really go ahead and sell it. So lots been happening on this particular stock. The stocks are reacting. Maybe the market is preempting some major announcement or a major development as far as GTL and GTL infrastructure is concerned. Another stock which I want to flag off, wherein we have just got a press release, is of course Ingersoll Rand. Apparently the company has entered into a lease with Mahindra World City Developers for acquiring 10.7 acres of industrial land at Kanchipuram district of Tamil Nadu. The lease is for a period of 99 years. Construction activity to commence before end of December. So two interesting developments happening. We'll take a break right now. We come back, discuss more mutual fund and insurance queries with our experts. Welcome back. Let's bring in our next caller. Khalid is with us right now on the phone line. Khalid, hi, good afternoon. Ask your question.
Good afternoon. I have shared my portfolio. I have started an SIP of last 6 months spread across 12 different fund houses. 4,500 in ELSS fund, which are with HDFC Tax Saver, Fidelity Tax Saver, ICICI Pru. And I want to check. I want you to review my portfolio and let me know if there is a consolidation required. Also, I can invest an additional 2,000 in my portfolio. IDFC small and mid cap, and IDFC premier equity looks to be my target zone. My overall target would be for 10 years approximately.
Okay, let me bring in Anjanya first. Anjanya, you've seen this is a pretty expansive portfolio, I should say. Not expensive, but an expansive portfolio. I don't know whether it's easy to track or not, but do you think it needs some bit of shuffling? Or
Yeah,
it's okay?
definitely. But before that, I'd like to congratulate Mr. Khalid for taking the right step in terms of SIP for the investment mode. And for any person who is salaried or earning on a regular basis, of course, SIP is the best route. in considering the fact today. But of course, his portfolio is in a way over diversified with almost 12 schemes, excluding even if we leave the gold fund, then also 11 schemes with approximately 21,000 investment going into that. So he should consider it into prime 5 categories. Let's talk about large cap, mid cap, value category, ELSS and gold. So of course we would advise to continue with HDFC top 200 on the large cap side, HDFC mid cap continue here. Tax, he is already having Fidelity tax advantage. On the value front, I would advise him to add ICICI Discovery Fund, which is again a very good fund on the value side. And one more flexi cap side, Reliance Equity Opportunities is what I would advise him to add to his portfolio. So consolidate in 5 categories plus gold would be the better option and easy to track, and of course diversification across the spectrum would be there for him.
Okay, Jayant, your suggestion?
Actually, it's quite a mirror image of what Anjane has suggested. So it's basically for an amount of around 23,000, 12 funds are too many. So around 6 would do. So 5 plus 1. So the other one being the gold. So 5 equity funds and 1 gold fund. There's a lot of overlap in terms of fund houses, in terms of management styles. So we could consolidate it in the following manner. So DSP top 100 he could continue. That's 2,000 per month. He could club HDFC Equity and HDFC Top 200. So, I mean, either of the two, but I have suggested HDFC Top 200, so that could be 6,000 per month. He has several ELSS funds, so again he could club all of those into one. So, I would suggest Fidelity tax advantage, so that would be another 6,000. Between the two Reliance funds, Reliance RSF's performance has been flagging lately. So, he could stop that and club that amount with equity opportunity, so that will be 3,000. And between the two mid and small cap funds, DSP micro cap, though it is performing well, I think already has HDFC mid cap, which is a good performer, so he could club it there. So HDFC mid cap will be 4,000 per month, and finally this Reliance Gold savings of 2,000 he could continue. Again, I don't think there is a need to add more funds, although IDFC Premier is a good fund, but already HDFC mid cap is an equally good fund. So I mean, so he could another 2,000 he could add it for the year only. So HDFC mid cap could be 6,000. And also he has so many LSS funds, but again I would like to reiterate that after April 1st 2012 he may not be getting the benefit. So whatever SIPs he has, as a matter of precaution, I think he should end it in March 2012.
Okay, that's a very fair point actually that Jayant has just mentioned. Let's bring in Jayant Bhave with us from Mumbai. Mr. Bhave, hi sir, afternoon. Go ahead, ask your question.
Good afternoon, sir. I am Bhavi from Mumbai. I had invested about 10 months back some money in Sundaram Select Focus, L&T Opportunities and Legal Banking Fund, but the NIM has gone down by about 25 to 35%. So, would you advise me to switch over to some debt fund, and if so, in what fund?
Okay. Just before I proceed any further, let me quickly read out the comments coming in on GTL. Let's pull up that. GTL spokesperson apparently has commented on one of the wires that banks have accepted the debt recast plan of GTL. I think this is what something the street was anticipating for a while. So finally, there is some headway as far as the debt restructuring exercise is concerned. The company has been in talks with lenders to sort out the same. Now it seems like there is more headway, and I think that's the reason why the stock is reacting up 20% as far as trade is concerned on GTL Infra. GTL Limited, on the other hand, has seen a very sharp up move. I think GTL Limited, for that matter, is up nearly 40% now on stock. Mind you, the last couple of months these stocks have cracked significantly, just kept on falling like anything. But we have more reports coming in right now. GTL spokesperson going on to add that the banks have accepted the debt recast plan. We'll try and touch base with the management to find out more details on this particular development there. 37% up on GTL. GTL infrastructure also looking very strong as far as trade is concerned. Jayant, let me start with you. What would you advise Mr. Bhave?
Actually, Mr. Bhave's portfolio is all over the place. He has 3 funds. They are all the so-called supporting or satellite funds. They are not in the core category. One is a sector fund, one is a thematic with a high concentration, and also they are not performed that well recently. But more than performance, it's the portfolio construction which I think is faulty. So what I would suggest is that he discontinues SIP in Sundaram Select Focus and L&T Opportunities, and commence an SIP in a decent large cap fund. For instance, say Franklin Blue Chip or ICICI Focus Blue Chip or DSP Top 100, any one of these 3. Relegate banking he could maintain, because although it's a sector fund, it is conservatively managed if you look at the ratios, so he could continue with that. Now his basic question is on asset allocation between equity and debt, but before that his equity portfolio itself should be recast. After that, I mean, once he consolidates his existing equity portfolio, he could add a debt fund to it rather than switching from one to another. So some of the debt funds which he could put in, and this he can do as a one time or as an SIP, whatever, but one time is as neutral as an SIP for debt funds. So BNP Money Plus, Kotak Floater, or say BSL Medium Term Fund, these are three funds, but he has to get his asset allocation right before worrying about the individual names.
Okay, that's an interesting observation and a very strong comment. Anjaneya, what about you? What would you suggest?
Yeah, I'll look at Mr. Bhave's portfolio from a different angle. He is aged 57, nearing his retirement or the third phase of his life. So my advice would be to, of course, gradually move towards a safer portfolio, which gives him continuity of income from the portfolio itself. And like Jayant said, this is of course the satellite part of the portfolio, so he should start moving towards the safer side. When I said MIPs and accrual portfolios, the accrual debt funds kind of investment he should be moving at, and he should opt for, once he is retired of course, he should opt for SWP from the same funds. When I say SWP, it's just opposite to SIP, where he's continuously getting a fixed amount from the investment. Suppose we just assume a 8% return from his MIP portfolio for example's sake. So he should do a SWP of 6% and keep a buffer of 2%, which takes care of his inflation increase in the overall expense going forward. So this keeps the continuity of his regular income post-retirement, and at the same time his portfolio is more oriented towards the safety side rather than the growth on the side. With this MIP and accrual debt is what I would advise to him.
Okay, that's the suggestion for Mr. Bhave's query. The next one, we have an email from Soha, who's written to us. Soha holds SBI Global Growth, Reliance Equity Opportunity Growth through the SIP route, where she's putting in 1,000 rupees every month. She's aged 34. Wants to know what are the future prospects. Anjaneya, I think there's not much thought that has gone into when deciding to buy both of these products. For a person who's aged 34, in case she wants to start afresh, what will be your suggestion?
See, if you're starting afresh, of course you have long time for building portfolio, building corpus. Of course you should continue with the approach of SIP on, that is one. You should create a portfolio which has got a good mix of large cap, good mix of equity, mid cap, value funds, as you are investing for real long term, value buys, stocks which are undervalued, good prospect going forward, plus some bit of ELSs. Because of its close-ended nature, they perform, and fund managers are able to take better calls on the portfolio, plus some bit of you can say some sectoral calls. So 5 kind of portfolio, where I again repeat, large, mid, ELSs, value and a bit of sector is what you should construct your portfolio. SBI Global, if we talk about, it's primarily a mid-cap fund which has performed pretty decent over last 6 months to 8 months period. And Reliance Equity Opportunities, again on the flexi cap side, performance has been pretty good. Shailesh Bhan from Reliance Mutual Fund has been managing it. Add some more portfolios, some more schemes to it, which are like I said, equity and other large cap and others would be my recommendation on same.
Okay, and Jayant, what's your suggestion?
Yeah, it's the same thing, because both these are more of satellite funds. Although Reliance Equity Opportunities has performed well, Shailesh Bhan is a little bit of a maverick if you look at his fund selection, his script selections, but he's no doubt performed well in the past. So if you really have to choose between these two, I mean, I would prefer that you hold on to Reliance Equity Opportunities and switch from SBI Global to any of the large cap funds mentioned earlier, say a Franklin Blue Chip or a DSP Top 100. So because at least one core holding is important.
Okay, all right, gentlemen, as always, thank you so much for your time. Great having you with us on Profit. Always a pleasure. With that, we wrap up this edition of BioCell. Thanks for your suggestions. Thanks for all your questions. Up next is Palaj.